Mini S&P for Tuesday, October the 19th, 2010 through the ISV Mini Day Trader. We had mentioned on yesterday's video to monitor the 73 area and then the 67 area, and if the market held below 67, then our intraday bias would then shift to down. We had the late selling yesterday. This was yesterday's profile. This is what occurred overnight, and this is today's profile. So we had this late sell-off yesterday, and it continued immediately in the overnight session. When I did the video yesterday, we were already trading down around 73. So I was suggesting to monitor that to see if the market actually holds below that and opens below it for the regular trading hours, which it did do. Market opened here for the regular trading hours. That's at 9:30 a.m. Eastern Time. It rallied right up, hit our target right on as resistance, and then came back down and went through the 67 and had a pretty powerful day down. So we're now looking at resistance still in 67, around 64. And then as far as the downside goes, obviously today's low, but then even as low as 52 and then 44. So some areas down below the market that we could be looking at for possible continuation lower. We also like to use the market profiles from the regular trading hours only to give us a little bit different perspective and a hopefully better handle on what the market is currently doing. We had a lot of trades triggered today, and you can see that, here's the down arrows here. We had, not all of these trades were taken, of course, but a lot of down arrows and several of the down arrows down here. We had a late long trade in there. This was a short trade, and then a couple of other long trades in here. So more than what we usually get. Of course, we had to trade this within the context of our resistance area up here in the 73 area, and also with anticipated support in around 67. So you can see that early in the day the market kind of initially dipped below for a few minutes, and then came above for a few minutes, came back down below for a few minutes. So we actually had a long trade initially in here that we were stopped out on, but then the market came up and we were able to get short a couple of times. One of them was a break-even trade, and the second short here, as you can see, it hit our price basically right on, had a nice drop. This long trade here was not taken. Price wasn't actually hit till here. Of course, we were in the red filter at that time. We came within just a tick of it here, which was somewhat unfortunate. We had actually another scenario here. This is why some of our traders actually enter stepping their orders in when the market is close to our area, because you can see, for example, that this blue line here just missed our entry by a tick right here, and the short trade that was triggered here missed our entry by a tick here. So that's why a lot of our traders, when they know that, for example, when the market had come up here and tested a known resistance and then triggers us into a short trade, this is a time when obviously we want to jump on board. Even if it doesn't hit right to the tick, we'll just go with a market order. So the market came up here. We had another long trade right in here, and that had a nice bounce to it. Then the market peaked out here. We had a couple of short trades. The first one was not actually neither one of these were taken, even though the second one really worked out quite nicely, moving about 3 points in our favor, and as a result these two trades here were not triggered. We did have a short trade in here in the red, so it was taken, unfortunately stopped out, but then we were able to get long in here, ended up with a break-even trade on that. Then, as I was just saying, we ended up with just missing that great trade there. It's got a little bit of frustrating here today because we had two really excellent entries right in here and the other one right here, and unfortunately neither one of them were filled from a purely mechanical basis, just by one tick. And you can see how much the market fell off from there and how much the market rallied from there. And so that's why our traders, what we really try and do is to make them, or to get them to the point where they're looking at the market in a much more auction process oriented way, so that they're not just mechanically taking these trades, but they're really understanding why the particular trade is set up, and as a result the degree of strength or weakness of that particular trade setup and trigger. So we had a nice short trade in here. We had the second short trade in here, unfortunately just nicked us by one tick and then had a good move down. But then we got short here. This turned out to be our best trade of the day. You can see that was from this red arrow here. We got filled right here and had a nice down move, so that worked out well. We're still in the trade. Well, it bounced here. We got another short. Unfortunately, this was when the market tested the new low and got rejected. So unfortunately, we're stopped out on that trade, and then it didn't come back to fill us long here. So we had a number of trades today. However, most of our traders were not taking all of them. They were taking them more selectively based on what we were looking at as far as the expectation from today, i.e. Anticipating a down move, and the possibility that the market could therefore switch its intraday bias. So that's really what we were looking at, and it worked out nicely in that regard. So that'll be it for today. Thanks for taking the time to view the video, and use those levels for tomorrow. Any questions or comments, please get a hold of us at info@eminidaytrader.com.